The currency world has been buzzing with excitement in 2025, and the latest development has added more fuel to the fire. Reports indicate that 190 exchange centers are being launched nationwide to specifically handle the Iraqi Dinar IQD and Vietnamese Dong V for years. Both currencies have attracted speculation about a potential RV or revaluation that could dramatically increase their value. The introduction of such a large network of exchange facilities has left investors asking, is this just a modernization effort, or does it signal something much bigger in the making? While no official confirmation of an RV has been issued by either Iraq's central bank CBI or Vietnam's state bank SBV, the scale of this move has made it impossible to ignore. Let's take a closer look at what these exchange centers mean, why they matter, and how investors are reacting. The reports highlight that a total of 190 exchange centers are being set up across the country, strategically placed to ensure wide coverage and accessibility. Unlike small currency kiosks or bank counters, these centers are expected to function as specialized hubs for handling high-volume transactions, particularly for the Iraqi Dinar and Vietnamese Dong. Each center is said to be equipped with modernized systems, including digital transaction platforms to process large-scale exchanges quickly, compliance and verification tools to ensure adherence to anti-money laundering (AML) and Know Your Customer (KYC) standards, centralized monitoring to track transaction flows and prevent manipulation or black market activities. This level of investment suggests that authorities are serious about controlling and streamlining foreign currency exchanges, especially for currencies that have drawn international speculation, even if not directly tied to revaluation. The move is undeniably a significant step toward building a more robust and transparent exchange framework. The news of these centers spread like wildfire across online forums, YouTube channels, and Telegram groups dedicated to the IQD and VND for many long-time investors. The number 190 centers nationwide feels far too large to be business as usual. They argue that such infrastructure points to anticipated high demand, possibly due to a pending adjustment in exchange rates. In the dinar community, this has been interpreted by many as the strongest signal yet that governments and major banks are preparing for a historic shift. Some speculate that these centers could serve as designated redemption points once a revaluation is announced, ensuring smoother processing for large numbers of investors. At the same time, critics and financial analysts remain cautious. They note that governments often expand financial infrastructure without necessarily tying it to currency reforms. For example, the push could simply be part of digital transformation strategies, broader banking reforms, or an attempt to curb reliance on black market dealers. Still, the sheer scale of the rollout has undeniably fueled speculation and reignited RV discussions worldwide. While the connection to revaluation is speculative, several potential motivations could explain why these exchange centers are being rolled out in 2025. Currency modernization. Iraq and Vietnam have both been under international pressure to modernize their financial systems. Building specialized centers could be part of a roadmap to make their currencies more globally competitive. Combating black markets. Both countries have long struggled with unofficial currency trading. By offering more official centers, they reduce the reliance on unregulated dealers who destabilize rates. Handling increased interest. Even without an RV, demand for Dinar and Dong exchanges has grown among speculative investors. The infrastructure could be designed to support this increased traffic. Pre-RV preparation. Although not officially stated, some investors believe this is groundwork for a smoother transition if new exchange rates are introduced. Having 190 centers ready would help prevent chaos, bottlenecks, and panic in the event of a sudden shift. In short, whether tied directly to an RV or not, the move signals forward-looking financial planning by both Iraq and Vietnam. Excitement aside, it's important to recognize the risks. The establishment of new exchange centers does not automatically mean a revaluation is imminent. Many such moves in the past have been misinterpreted by eager investors. Some risks include overspeculation. Investors could read too much into the development and make risky financial decisions without solid evidence. Scams and misinformation. Opportunists may exploit the hype, spreading false claims of RV dates or offering fraudulent early access deals. Economic reality. Iraq still faces political challenges, dependency on oil exports, and regional instability. Vietnam, while stronger, must carefully manage inflation and trade balances. These realities make sudden, dramatic reevaluations unlikely without long-term planning. Financial experts stress that the only reliable confirmation will come from official announcements by the Central Bank of Iraq and the State Bank of Vietnam. Anything else should be viewed with caution. Despite the cautions, the creation of 190 exchange centers is a major step forward and worth monitoring closely. Whether tied to revaluation or modernization, it reflects a serious investment in financial infrastructure. For investors, the key indicators to watch include official statements, track communications from the CBI and SBV for hints of reforms or rate changes, oil prices. Iraq's economy and, thus the dinar remains heavily tied to petroleum exports. Higher oil prices strengthen its reserves and increase RV potential. Vietnam's trade growth, as one of Asia's fastest growing exporters. The Dong's stability depends on maintaining strong trade and foreign investment. IMF and World Bank programs. Any agreements tied to currency policy could give clues about future rate adjustments. Ultimately, while the speculation will continue, the smartest strategy is patience and reliance on official, verifiable data. The announcement of 190 new exchange centers dedicated to the Iraqi Dinar and Vietnamese Dong is a landmark development that has reignited excitement among investors in 2025. To many, this looks like preparation for a long-awaited revaluation. To others, it's a sign of modernization and control rather than imminent change. The truth likely lies somewhere in between. The infrastructure expansion reflects real progress, but it does not guarantee a sudden RV. Investors should remain hopeful but grounded, focusing on hard economic indicators and official government announcements rather than pure speculation. For now, the creation of these centers marks an important milestone, whether it leads to revaluation or simply a stronger, more transparent financial system. It shows that Iraq and Vietnam are taking bold steps to shape their monetary future.